So guys, you see, back when we were in the same exact situation in 2014, we came above the 20 week, we got rejected off of this price level. So if we can get above it now, it's going to be huge. Hey guys, welcome back to DCA. What we're going to do today is talk about how huge Bitcoin hitting the 20-week moving average and bouncing off of it just was. So this repeated test, the 20-week moving average that we've had essentially all through August into September, and then, basically up until September around 29th or 30th, where we've now come and are about to approach this around the $53,000 mark. This is going to be a huge event for Bitcoin and will essentially determine whether we need more time, whether we need to go test the 20-week moving average again, or whether this bull run is really going to get kicked off where we can start setting new all-time highs. So I'm going to show you how historically this has been the inciting event for every major bull market and why this test that we're coming up on of $53,000 is going to be absolutely huge. Okay guys, so like we said, we started back on August 9th where we were able to make it above the 20-week moving average. We came back down and quickly tested it with another test on August 19th. We then had the capitulation event from 53,000 down. We almost got down to 42,000. We stayed just above it. Then we came back down. We actually had one single close below it on September 21st, but we immediately got back above it. And we've been testing the 20-week moving average every day since. If you're one of the 2 to 3 people that have been watching my channel, you would know that we've maintained that hitting the 20-week moving average, staying above it, is the key for the bull market to continue and to really get kicked off. Okay guys, so let's just start at the beginning. So you can see we came up, tested this 20-week moving average, and that's what we used as our springboard to kick off up to the all-time high back in the 2011 market cycle peak. We crashed back down, came through the 20-week, got above shortly, but weren't able to hold it. And then, we went down back through. Then we came above and critically were able to hold it as support. It came above, had a small test, came back down, tested it for about a week or so, and then was able to hold it as support, which is what began the bull market for 2013, the double peak cycle. So you can see we just rode right along this 20-week. We're able to go above, held it again as support. It confirmed the bull rally. That's when we went up to 250 and then eventually up to 1200. A lot of people have maintained all along that the 2013 cycle is demonstrating a lot of similarities to the current cycle. That is to say that people theorize that this will be a double peak cycle, and that's sort of what it's looked like so far. Now, obviously, it's more protracted because there's a lot more money in the market now. And that's kind of what we've maintained, is that this seems like a strung out version of the 2013 cycle. Whereas these events happened within 4 or 5 months of one another. It seems like this is playing out now as it did in 2013, but in, events that will take 6 months to a year. So we hit this peak, came down, fell below the 20-week, and then got back above it, which is very similar to what you see now. We got above, came back down, got back above, and held it as support. So if we go back here to 2013, you can see how, as people have been predicting, this cycle is beginning to look a lot like 2013. So critically here, and this is why I highlight this point, why the $53,000 test is going to be so important. What you can tell that happened in 2013 was we fell below this 20-week moving average after the final market cycle peak. We fell below, and then several months later, similar to now, got above the 20 week. We came up, hit at around 680, came back down to the 20 week, held it as support, tested it again, came up, and right as we approached this 680 level, that's where we got rejected and just got sent right back below the 20 week moving average. So, I don't want everyone just to think that just because this has happened, that this is a guaranteed lock for the bull market and you can just go all in on crypto right now and you're guaranteed to make 10x profits, because there is a bullish case to be made, certainly. But you cannot forego the bearish signal, which would be hitting this $53,000 mark where we're at now and getting rejected off and going back below the 20 week. If that happens, I contend that we will likely just need more time. I don't know how long it will be. It could be several months. It could be up to a year. But if we get rejected off this 20 or off the $53,000 mark that we're approaching and get sent back to the 20 week and aren't able to hold it, it could lead us to an event very similar to like happened in the early part of 2014. So that's kind of what I'm watching for, guys. I want to see what happens here. Is this going to play out like the middle of 2013, where we come down below, get back above, hold as support, and then are able to take off? Or is it going to play out like early 2014, where we got above after falling below it, came up, and then when we came to our first big price test, got rejected? So that's what, in my opinion, this is going to be the deciding factor, at least in the short term here. It's not to say there won't be more tests to come, but this is certainly the first major test that we're going to have after holding this 20 week. So one other thing to point out is typically you would like to see the 20 week moving average trending upwards. And with that said, it is now, but all of our tests have come while the 20 week is trending downwards. If you take a look, another similarity back to 2013, 2014, these tests of the 20 week came while the 20 week was moving downwards. All of these tests here, here, and here occurred while the 20 week was moving downwards. Then when it leveled out, it got rejected off of the 680 level, came down to test the 20 week. That's where we got rejected. And then eventually went on quite a long down streak where we essentially didn't level out until about June of 2015. So, just to continue the analysis though of the 20 week moving average, you can see once we did level out and were able to come back above, holding this 20 week, this is around the start of 2016, at the end of 2015, we got above this 20 week, came, and once we tested it, we were able to hold it as support multiple times. And that is what catalyzed the entire run through 2016 into 2017, all the way through to the end of 2017. So essentially, guys, from 2015, October 15th until 2017, December 16th, you had 2 years and 3 months or so, 2 years and 2 months of nothing but bull market. And it used this 20 week moving average as a springboard every single time. You can see it bounced off of it and did so pretty frequently. It would go up, come back down to it, right off of it, go back up, come right back down to it, and then right back up. And then when we finally crashed through in January or February, we came back down and through it. And that's how you could have known that the party's finally over. So guys, this 20 week moving average is a remarkably reliable indicator for the bull market. If you're able to hold this and break above your price ceilings, like we have coming up at 53,000, big things are going to happen. We are going to set, I would say, if we get above this 53,000, new all-time highs are just right around the corner. I don't know if they'll happen within the next, week or so, but I think there is going to be quite a bit of resistance through this level. But I think if we're able to get above this level right here, we're off to the races. So, let's see what happens. The whole point is this is going to be the big test. Then if we're able to get above, we're good to go. If we come back below it, then we need to see if we can continue holding the 20 week. If we get below this 20 week, I think there's going to be some rough times ahead. So let's see what happens, and hopefully we get above. All right, guys, if you like this type of content, hit like and subscribe. As usual, I appreciate you guys. And until next time, see ya.